Good morning, everybody. This is Dee Dee with Power 3 Trading. Thanks for joining. I'm not here just to teach you strat, but to also help you find ways to profit from the strat techniques. If you have more questions regarding the strat, please reach out to my guy, Rob Smith at Smiths in the Black channel, Robin the Black on Twitter, and at Sepia Group. So yesterday, market was a little choppy. Let's just look at the cues real quick. Not on this. Let's look at it on here. And so, Q. So what did we have yesterday? Market gapped up from the prior day's close, traded up, but it was in a tight range. And so broader markets in a tight range. We're at the end of the month, guys. Trying to take this month green, probably a challenge. I mean, this is the quarterly. There's certainly not going to do that to this month. But when we look at our broader time frames, we can see how difficult things start to get a little bit of choppiness as we get to some place of exhaustion, which we reached, right? On Friday, this was our monthly broadening formation where we said if price is going to take out this outside bar, we drew this broadening formation up to see if there's some resistance, and surely it hit it. But you can see prices gapping down again this morning, right? So closed yesterday here at 293.48, pre-market it's at 289. So we'll see what happens for today. But if you look at your daily pattern, you're at a 2 down, 2 up. So it barely took the day yesterday, 293.80. It got to 293.87, 7 whole cents. And so you got your 2 down, your 2 up, and potential 2-2 continuation to the downside. Okay, so just be careful. But when I look at this, right, I'm always looking at my 2 and 3 day patterns. This will be inside a 2 day range because today starts a new 2 day candle, right? And so this price action will be inside this range, right? Inside this range, 294. No, so it's not a compound 3. But it will be inside this range, guys. So what does that mean? More choppiness. So we're going to use caution here as we continue to trade. What we'd like to see if price trades below yesterday's low is our CCI shows us some momentum trades back below -100 on this daily pattern. So we're going to use caution here because we don't want to get stuck in this range for today. It's going to it'll be a choppy trade. So that's what I'm preparing for, what I'm preparing my mindset for. And so we're going to use caution there. Yesterday, though, I only traded Tesla, and I tell you, this is why I say, when you're trading against time frame continuity, like I said, market gapped up yesterday. No expectation it was going to go 2-2 on the daily with Tesla. And you see, we just talked about the Qs did barely by 7 cents, but this was a huge downside trade here on the daily, huge outside bar in the 90 on Friday. So there was a lot of ground to cover if this was going to reverse up. So what I did was I just drew my broadening formation on this 18. So this was the high of this 90, right? This was the high of this 90, which was that last 30-minute close. And I drew that back to the high of this 90, which is this high of this 3 2 down bar here. right? So that's this line, this broadening formation. So what I was picturing, and then I drew this guy this way. So this was this high of this 90 here, back to this high of this 2 down bar here. And the reason I did that, and I actually did that after the market, so we could, I mean, after the market opened, this we could have done in our other color. And the reason I did that, guys, here's what I want you to think about. The market went 2 down. We're not trading that. Then it went inside. I'm not going to trade that because remember our signals here are on the 18. When the market is tight, you have to wait to see when you're say tight, when you're in conflict. This is conflict. You're still trading inside this 90-minute range, right? So the market is in conflict here. We're going to wait and figure out which direction the market is going to go. Then we got another inside bar. And you know, guys, I tell you all the time, I use my CCI to help gauge direction, or not direction, but momentum. And so when price took this inside bar here and started to trend up above this level, right? So this was Friday's high on the close, not the high of the day, but on that 90-minute close. This was Friday. So when price started to trade up here, it's above zero. So remember, below zero, I'm looking to short. Above zero, I'm looking to go long. And it started trading above. That's when I drew this line because I needed to gauge how far price action was going to go. So I'm looking here at this level, right? This is where we drew this broadening formation down. This was on this 90. Is it going to take this 2 down bar? Remember, so I'm looking at this 90-minute, 3, 2, 2. Is it going to take this 2 bar here? I drew this broadening formation this way because we already had this going this way. So we knew if it crossed above this, price action was likely going to take this range, but how far, we didn't know. So what I wanted to do in this case was if price traded above this range and stayed, then I would look to hold this position, go long. As you can see, it didn't do that. So on the 6-minute, you can see it traded up, came back below. I had to exit here. And then you can see this move right back down. Very, very tricky trade. But you can't hold these, right? Why? You're still, first of all, you have this big down move here on the day. Your inside day, CCI is below -100 on a daily. It's below zero on the 90. There's nothing here to indicate that this is going to be a momentum to the upside, continuous momentum, I guess is the way to say it, continuous momentum to the upside. And so that's how I use broadening formations specifically when I'm scalping trades, because I have no expectation that this is going to go all the way up or down, depending on the direction, without CCI supporting this, right? So CCI would have to be back above zero for me to even think that this would give us a move to the upside, a continuous move to the upside. So now I'm just looking to scalp trades. And so once that hit, came back in, take your profit. I tried to get back in here though, got triangled out here. I could have held this because remember, I drew this line off this 90-minute broadening formation. It actually held. I didn't like the trade, so I got out. Then the next cancel, it stayed inside because I was concerned that this was going to come all the way back down. I didn't want to lose too much money on this, so I took a small loss. Then it went back up, jumped back into this. It hit this upper broadening formation that we drew, right? Didn't hold, had to get back out, And so I was done for the day. I did not try to short this. Now you're back inside 90, because remember, all of this is happening in this first 3 hours. And 12:30 flip, you're in the 3 hour. So if you were to flip that to like a 3 hour candle, right, this is what that looks like. guys, it's hard to trade these when you're in conflict. So the recommend my recommendation, especially if you're on a small account, is maybe to not even trade conflict, trade time frame continuity, wait for those moves, those gappers to reverse in time frame continuity, and you'll see some nice profits. And you see that here on the 90. This was an inside day, but you can see as Tesla was trading down, wherever we had conflict and then back down, you can see price action traded in your favor, and you could have had some nice moves. And so you could just avoid any of those conflicts inside days and avoid just trying to trade those. We'll talk about Tesla again today because it's gapping down. But what I want to show you is, so this is my gapper list. I don't have Snap on my list because it's below my threshold. So when I created my criteria, my prices, and Tesla's obviously not on the list either because it's still above 600, but it's my go-to stock. But when I'm scanning for my gappers, this is the price I like to use, 60 to 600. And the reason for that is I like volatility in the stock, and I like for stock to have pretty good volume. So I look for the volume, but I also try to avoid some of those stocks that are priced below 60 because you can get a lot of craziness. Sometimes the market price action traders will trade these stocks and they just don't make a whole lot of sense. So I just try to avoid trading, stocks that are a smaller cap. So anyway, Snap came in, lowered their guidance, and they're getting killed today. And as a result of that, let's see where they're trading here on the daily. Yeah, they're down about $6, right? So what's happening here is they lowered their guidance, came in, and because of their them lowered their guidance lower than their previous low, the previous range, lower than their previous low range, it's affecting some of the other social media stocks. And so we're gonna take a look at Facebook. I don't care to trade Facebook either. I don't like the way it trades, but we'll look at it. Facebook is trading lower. Twitter is coming in a little lower. I'll probably avoid that. Still a lot of Elon Musk noise, so I'm probably going to avoid Twitter. But we'll take a look at Facebook because it's gapping down. Let's look at our other gappers. Let's go back to my gap list. So if you guys want to look at Snap, we can look at that. We'll look at Facebook. Roku is gapping down. So let me take a step back. Let's look at it on the longer time frame. All right, so Snap is here inside this range here, pre-pandemic lows. All right, so when was the pandemic hit? About February, right? So this was January, February. So it's right in this range, right? The lows there, geez, 789. I don't know, we'll see. But April lows were 1085 in the month. So we'll keep our eye on that. We'll see if we can chart it. Facebook is still inside month. We're at the end of the month though. We'll probably use a little caution there. I don't like to trade inside months, inside. We'll use some caution here with Facebook or Meta platforms. They will forever be Facebook. So we'll use some caution here. We'll see if we can chart it, but I don't like trading inside month at the end of the month. So I'm gonna use caution there. Roku is trading, gapping down, guys. You got this big range here, though. It looks like it's in. So on a daily, could it take, go back to month lows? We'll see. Certainly a possibility. Look at that. Shopify, inside day, potential to take that low. They have a 10-for-1 split coming, guys, next month, end of June, 10-for-1. So I may avoid it. I would love to get back into because I used to trade Shopee all the time, but we'll look at, I may wait and not do anything with that until after the split, because the options on Shopify are not that great. Spreads are really wide, which I don't care for. So Datadog is gapping a little lower. We have a 2-2, maybe a 2-2 continuation to downside on that one. So these are going to be all on my list for today. DoorDash, it's going to be inside this outside bar here. And you got this 3-bar here. I'm taking it off the list. I'm not going to look at it. I don't like it. You got this outside bar here, and you got this outside bar here. Today is a new 2-day candle. If it trades below this, below 60.63, maybe it's something I look at, but as it stands, I will stay away from DoorDash inside this range. I'm not interested. Airbnb is also gapping down this morning, but again, it's at some exhaustion, guys. I don't know if I'll put this on the list. It hit its all-time lows. Remember, this was a IPO in 2020. It's at its all-time lows. I don't know if I will try to trade this to the downside. Be interested to see what the Qs and the SPY does. Zoom is actually gapping up on the news. Their forward guidance was positive today. So don't know if this will hold though, because of the broader market. So that'll be interesting to see. But when you look at this again, this will be in conflict, right? You'll be trading against the month, but the daily and the weekly could certainly be higher. Right, so this was yesterday. So new week could turn this green today. So the daily and the weekly could be green, but again, looking at the monthlies, guys, across the board, not sure if I want to try to trade that to the upside, but I probably wouldn't short it given the new guidance. There may be some buyers out there. Tesla, of course, will always be on the list, but it's inside yesterday's range, right? But it's got to take this 2-day down for a continuation. Basically, I have to take Friday's low, which was 633, for price action to continue lower. So we'll certainly take a look at that. All right. So let's see, where do I want to start, given the time? Because I got a lot on the list. I'll just start with my favorite stock, because I know I'm going to probably trade it. Let's just remove these. We'll start with Tesla. And again, because we're toward the end of the month, guys, we want to be careful that we don't get stuck. Price trading down in the first 18 minutes and then trading in a tight range. So we want to be careful with that. I gotta go back so far. Let me see how I can do this on a daily, because we're inside this day here. All right, so we know it's got to break above or below that daily range. 679.96 because we won't trade a double inside day. Okay, let's say that was 679.96. So the next lowest bar, or should I say highest bar, 678 in that inside this range. Okay, so looks almost horizontal. All right, so that's the next closest bar, and that's inside this daily range. All right, so then we're going to take this low here, the low of this bar, and what's that value? Well, that's weird. It should go here. 638.06, 648, 648, 642, 638.32. Bam. All right, so we know price has to trade. Let me change my colors if I have this. Yes, good. Let's change our colors back to our preferred. All right, so here's what we know. Price has to trade outside yesterday's range. Now, here's going to be the trick. We have this 2 down bar, which is Friday's low. If price does not take this or trades below this low and comes back up, guys, you have to get out. So if we take this, and I'm going to draw some more lines because it looks like it's already below this 2 up bar. But if we take this and it trades down and comes back inside this range, exit this position immediately and see if there's another opportunity. CCI has to trend down on this 90-minute below -100, or I will not take this trade. This is going to be a tricky trade. End of the month. You already hit a significant level here, right? So remember, this was our, okay, I do something. Oh, that was a Q's. I didn't do it on here. But remember, so we're already at exhaustion on the broader market. So if price action does not continue, so we don't have momentum, and this CCI here is moving kind of sideways, guys, like here. I'm just gonna avoid, or I'll be scalping like I did here. Inside bar, draw my broadening information off that inside bar, 2 up, a 2 down bar. Take profit quickly. We can't hold these unless we got simultaneous breaks, okay, on the broader market, and the Qs break back below Friday's low with some momentum. All right, but let's look at if it breaks down below this level, where, because it's trading inside this range here. This is a next 2 down bar. Well, this would be the next at 648, but we already said it needs to trade below this level, which was yesterday's low. Yeah, so what's that? 638.06. All right, so this is 648. All right, so that'll cover that. So this will be our next 2 down bar. And so if it trades below Friday's low, this will be our next target. So Friday's low is 633. This is 627.24. And so we're just gonna draw our broadening formation at the next highest low here. So 627.24, 630. I think that would be it. 622, those are all lower. Here we go. This range here. All right, so what does that mean, guys? If price breaks below yesterday's low, then this level here around 626 would be our first target. So price breaks down, trades below our level here, maybe trades below 633, 626 will be our target. These will probably get a little tight if you look at these daily ranges. See how tight these ranges are. So we have to use extra caution is really the message here. We have an outside bar here, but you have a lot of tight ranges inside inside this range here. A lot of small candles, guys. And so all that simply means is when you're looking at your charts, look at these two down bars. We have an outside bar here, that's 608. You have this outside bar here, that's 609. No, two up bar here at 609. Inside bar here, 615. So the next 620, I'm not going to draw all of these, guys. It's 622. What I'll be looking for is whether or not price holds this level. And then as we look down, 620 will be our next level, right? This is the next two down bar, 620, 621, 29, 620, 46. So if price holds this broadening formation that we drew here from this next two down bar, you just kind of look left and see what two down candles are in that range to see what price is going to take out next. But I would use caution here. The reason I'm not going to keep drawing these out because this is pretty tight inside here. If we were looking at this on a longer trading, longer time frame, so you can see I'm visualizing that this is an inside 3 week pattern, 621.29. So we saw that on that daily chart, and so we are here, and that will probably cover this range here. All right, so so Tuesday starts a new 3-week candle. So this is the last week of this 3-week chart. All right, so this would be my target where we drew those lines. This is 621.29. If price hits that level and trades back in, so we drew this on 620, right here, 623. If it hits this 621 level, guys, and reverse, this trend is over. Just be careful with that. But if it continues to trade down, that 608, if we go back to, so this low here, 608. So if we go back to this daily, go back to our daily charts, that was this. And that's why I said you can see that how tight this is. And we just saw that on the week 3-week pattern. But this is that 608 right here. Okay, so this is that outside bar. All right, so we'll go ahead and draw that. Let's see. $609.50. Okay, so we're going to go ahead and draw that. And so that'll cover this 3-week chart. Because like I said, this is the last week in the 3-week pattern, in our three-week pattern. So if price continues to trade lower, then we're looking to see if it's going to take out. So it's already taken out this range. It did not take out this range. This is 621.29, but it took out this guy, 648. Retesting this area here. So trades below 648.84. We'll look to go short, see if it's going to take out Friday's low at 633. Then you're at this range here, 621. I drew this, though we're at about 624. on the daily, 620, 624, 625, 625 on the daily. Then you have this range here at 621, and then you have this three-week range at 608. That's a lot, but it's Tesla. Maybe it happens this week. We'll see. Just keep our eye on it. Maybe not today, but again, this is Tuesday. We still have 4 days, right, this week to see if this market is Tesla's going to continue to trade to the downside to complete this 3-week pattern. Okay, so just keep that in mind. On the upside, I would do the same thing as we did yesterday, which was I'm just scalping to see if price action trades above yesterday, because remember, it's got to trade above yesterday's high. Now you're inside this big range here. So looking at this this inside bar, and so that doesn't help me. So I would look for if price trades above this inside bar. Don't have really a broadening formation for that. Let's see. We go to low of this down, 2 down bar. So I'd want to see if price trades to the upside, it needs to trade above this range. So I want it to trade above. And what I did, guys, I just drew it. Let's see, blow it up, make it easier to see. I drew this from this 2 up inside bar. That didn't really have a range here on this 18 minutes. So I do it from this inside bar down to the low of this bar. We could have drawn it here to this 2 up bar because we're trading back inside this range. Yeah, I'll leave it there. We're trading back inside this range here because these guys are all outside of this range. It's inside this, it's an inside bar is inside this range here. Let me see what the low here. 690.12, the high is 689. So it's actually outside of this range. This is a 2 up bar, but it actually is inside this range. So I'm gonna go back here. So this is inside this range. We're looking for price to trade 2 up. So what I'm looking for is this is a 2, right? So 2, 1, 680, what's the low here? 679. So 2, 2, 2 to the upside. So this is the range I'm looking at, right? And so this is almost that day's high, Friday's high. All right, so that's how I'm looking at this. So what I'm saying is price has to trade above this range for me to look to take this to the upside. If it trades up here and comes back down, that's failed. Reversal, look for a reversal pattern. So let's see what happens there. But if it continues to trade up, then we'll look for price action to take this range here, which is pretty close. This high is 678.14, 678.45, 720. So I'm sorry, 718.45, 720, 721. All right, so that's how I'm gonna play it. Let me just mark this up. I spent a lot of time on Tesla, always. Gosh, look at the time, guys. All right, this is how we're gonna play it. All right, we're gonna short below. I said 684 or 648. We're gonna, and 648 was that previous 3-week candle. So we're gonna go short below this range here, 644. It is trading right now at 656, but keep in mind, guys, so this is a 2 down, 1, 1. It needs to stay down, so be careful. I need CCI confirmed with CCI below -100. Because if this trades down like it will, so it's CCI is going to cross back below 0. But if it does not cross back below -100, it may chop up in this range before it breaks. So be careful that we don't jump in that first 18 minutes. This is a gapper. Let's kind of monitor it. Feel free to go onto a shorter time frame for potential entry. But this is where I use CCI. If I don't get confirmation, or if it's coming down and coming back up, it's choppy in that shorter time frame, I'm going to avoid that and wait and see, because we don't have to jump in on this. If it's going to trade lower, we'll get an opportunity to get in, even if we have to go to the 3-minute time frame. And then here, we're going to go long above this range here. So it's got to stay above there. So we'll call it 693, which again, with CCI above 100. Okay. All right. We're running out of time. Let me see what else do we want to look at. Let me look at who else I had on the list, guys. I had Snap. I had a lot on the list. Gee. Facebook. What did I say? Charts. Facebook. We said we liked Facebook. Insight Month. Zoom, we said gapping up. I don't want to trade that. Airbnb, we said was at exhaustion. So I'm going to avoid that for now. Wait for a scalp. Dash, we said was going to be inside the 2-day range. Datadog maybe. Shopify, I think I said I wanted to hold off, but may put it on the list. Roku. Okay, let's look at Roku and then we'll wrap it up. Roku. Some really old data here. Never delete it. Let's get rid of that. So Roku traded down yesterday. I actually missed it. I had it on my list, but I didn't. I was on this 18-minute. I saw this outside bar. This would have been your trade if you had gotten in off that outside bar here. You could have, again, when you're scalping, you got to wait for that triangle to form, right? And then you can draw your broadening formations off that 2-2. This was a 3-2, and this would have been your target, right? So you could have drawn that. Yeah, turn that back on. But you could have drawn that here. You had a 3-2. Now you have your that two triangle subtri. So you had an outside bar broadening formation, then it went 2 down. Draw your broadening formation off that 2 down low, back to the next lowest triangle in that next lowest candle in that range, higher low. This would have been your target. Price traded down, created this little doji. You see it coming back up in this range. You know you're going to take your profit. Just get out. So anyway, it's a gapper today to the downside. It's taken a beating as well. You got a 3-2-2 on the daily. It's inside this range, guys. Let's see if we can draw. Yeah, got this big. I don't like this. It's got to try to take this. Let's see what it looks like on the 18. Okay, so maybe an opportunity here. Let's see how we can draw this. All right, so we know we have this outside bar here. All right, so we'll just draw that. 87.43, 87.87. 90. Gotta go way back on this guy. All right, so we drew this to this outside bar. 90.36. That's 91. Yep, we're not going back to 2019. All right, so we'll go this low of this day to this outside bar here, okay? This is already trading outside this range, so we're inside this range, guys. So now we got to find a level inside this range. So we got the low of the day covered. You're already inside this range. So we're going to take the low. So if you can see this little orange line, you're inside this range here. So this went 3, 2 up, 2 down, inside. So you're right inside this range. We're going to take this 2 down candle here. Right? So that's outside this range. So what we're looking for is price to trade down. Right? So that's below this range, 3.2. This is your lower broadening formation for this 3.2 down bar here. We don't have another lower bar in this range. Hold on, let's see. Nope. Nope. The daily. Nope. So we drew it to here. Yep, we'd have to go way back to 3 years ago. So we'll just use this for now. Let's see. But that's a pretty big slope. So what I'll do on this, we got an outside bar here. It's got to come, you got to take this outside bar. So it's not in this range yet. So I'm going to draw that. So what I'm looking for, guys, if price stays below this range, so this is the low of this outside bar here. This is the low of this outside bar. So this is the upper, let me blow this up. All right, so this is the upper broadening formation for this outside bar. Here's where Roku is trading in pre-market. So got a big range here. So if it comes inside, which it already is, this is the upper broadening formation, then we're looking for it to take out this range, right? So it's already trading inside this upper broadening formation. Y'all with me? So if it trades below here, so this is going to be my range. If it trades, and this is yesterday's low. All right, so if it trades below this range, we're looking to go short. So that means it has to stay below yesterday's low of 87.87. And this is going to be our broadening formation. Now, that doesn't necessarily mean it's going to trade all the way down to 80 because it still has to take out these ranges, guys. This is a 2 up, this is 2 down, this is a 2 down. Okay, so it first has to take out this inside bar here. So it's got to take that guy. So this will be our first target. So price is already gapping below yesterday's low. Short, target. It's only a $2 range. This is important because if it fails to go lower, trades back up, you may be stuck inside this range. I want to avoid getting chopped up here. Okay, this range we want to avoid. This is a 2 up bar, 2 down bar, 2 down bar, doing nothing. Big outside bar, guys, big outside bar. So we want to avoid that. So price trades below here, fails to take it. So goes inside, takes this inside, but fails to go further. This trend is over, maybe a potential reversal, but be careful inside this range, big outside bar here. I may just try to avoid this altogether. Then I'll draw this broadening formation if it trades higher. So it's got to trade above this range. This is the lower broadening formation, okay, for this inside bar here, lower broadening formation. For me to go take this higher, it's got to trade above this area. Avoid. You do not want to be stuck inside this range. Let's look at that on a shorter time frame. This is what you see on Roku on a 60. This is with this at 11 o'clock, right? Here's 11 o'clock, guys. This is what you want to avoid. Price action is the range here is not getting bigger, it's getting smaller. Range is getting smaller, which means we have to break out of these ranges. We do not want to trade inside these ranges. When price action broke yesterday on Roku, we had this big outside bar. At this 90-minute flip, which is 11 o'clock, range got smaller. It did not break outside of that opening 90. So when the next day comes, like today, you have to say to yourself, you cannot trade inside this range. You have to trade, price has to break this range. That's all I did. I just drew this broadening formation at from this inside bar to the close, and I'm saying if price trades above this range, maybe there's opportunity to go long, right? 3, 1, 2 to the upside. I'm not fooling around in this range, okay? And then we drew this guy on the daily, right? Yeah. We drew this guy way back here. I'm sorry. This is on the monthly. I'm sorry, on the 90-minute, geez, on this outside bar. At this candle, I mean this trend line, and then we had this trend line on the 90. All right, so that means we're staying out of this range, okay? So let me write this up, and then we'll close. Let's go. All right, so we're gonna go long above that's inside 90 here. So above this range here, above 92.22. All right, so it's got to get outside of this range. Otherwise we won't trade it. Choppy, all right? Broad information's got smaller, or not broad informations, but the ranges got smaller. You're inside this guy right here. All right, so we want to avoid that. We're going to go short below this guy. So we got a 3-1 short below 88.62. So we'll just call it 88. All right, short below here. This is that range. So we want to short below this range, but we got to use caution, right? All right, we have to use caution here, guys, because this could, I need CCI, yeah. CCI trending down below -100 on 90-minute. And the reason I say the 90-minute is because it's already crossed above it. If it's crossed above it and it's moving kind of flat, this will probably be choppy. We need momentum on our side. So we'll see what happens because it's a gapper. It'll probably trend down, but how far will be the question. So I'm going to use caution with that. Above 92 over here, above this range long. Okay, so charting takes time. But I tell you, if you take the time to do this, guys, you get the odds in your favor. You're less likely to blow up your accounts and increase your opportunity to make a profit. Proverbs 21:5 says, "The plans of the diligent lead surely to advantage, but everyone who is hasty goes surely to poverty." And that's what we're doing every morning. we are being diligent about how we're setting up our trades. And then we have to use patience and wait for our setups. We have an idea of how we're going to trade this, right? We know we want to short if it goes below 88, but if it fails on these broadening formations, then we know that we have to exit those positions, right? We can't hope it's going to continue. These are broadening formation pivots. I've just figured out how to draw them on the longer time frames, and then use an 18 for intraday moves or scalps, because I don't have a program to configure it the way that I see how to draw them. And I've looked at some of what other guys are doing. But I tell you, if you can't draw these using the broad informations the way I draw them, pivot points you could probably use. Just don't think about the S1s, S2s, S3s, R1s, R2s, R3s, because that's what used to get me. And I'm like, oh, okay, maybe it'll keep going. Yeah, that doesn't really work. You really have to understand magnitude. And so that's why these work a little better, but they do take time to draw. Okay, so let's be diligent. Let's not jump into the market. But as price is gapping down and you see these reversals, so this actually on the Roku would be a 2-2 continuation, right? On the daily, you see that, right? It's 3-2-2 continuation. So let's be careful, because it may go inside. So, but right now it looks like it's below yesterday's range, but that doesn't mean that's the way it's gonna open, guys. We still have another hour and 20 minutes before the market opens. All right, so, and then Tesla, again, is inside. So using caution there, because unless we get those simultaneous breaks and the whole market is puking, I'm going to use some caution here, because market could, Tesla could right out of the gate gap down, continue, hit these levels before my 18-minute flip, and reverse. So just be careful with that. All right. Appreciate you guys joining. If you have any questions, feel free to hit me up on Twitter at R3D Pepsi. And if you like my videos, please subscribe to my YouTube channel. Thanks very much, everybody. Appreciate you joining. Okay, let's